The Insiders, proudly brought to you by Glacier by Sanlam and Time magazine.
Welcome to The Insiders, a business panel aimed at giving you the inside information to help create a winning nation of confident investors. Today we're looking at the state of the nation, and we examine South Africa in the context of the recent strike action, the rising interest rate environment, the emerging middle class. Are we creating enough jobs? Is that income gap closing? And of course, we look at this all in the context of the globe. What does the world stage hold for the next 10 years? To discuss this and more, I am joined to my immediate right by Alec Hogg, who is an award-winning financial journalist. He is the founder and former CEO of moneyweb.co.za, and more recently, he is the founder of biznews.com. To his immediate right, we have Jahendra Naidu, who is a former trade unionist, the former executive director of NEDLAC, and the current chairman of the J&J Group, a company focused on financial services and particularly infrastructure in South Africa, but rapidly growing beyond South Africa's borders. And to his immediate right, we are joined by David Shapiro. And David, can we call you South Africa's most loved market commentator? Alec, you would agree with me on that point.
Well, certainly by Linda. Not about the rest of us.
You will have heard him in the KZN context on East Coast Radio, regularly giving the market update. David is also the vice chairman of Sasfin Securities and an award-winning fund manager, having garnered the Raging Bull Award for his value fund and also for the best performing equity fund in 2012. The stage is set. Let's talk about the strike action and confront perhaps one of our biggest challenges head on. Alec, a 5-month strike in the platinum sector, followed by a 1-month strike in the manufacturing environment. Many members of our audience may have actually felt that within the context of Durban and the manufacturing environment that we see in this territory. What are your thoughts? You have interviewed, in fact, as recently as yesterday, NUMSA. Perhaps you can give us an update.
I think most of us here from this province we're resilient. Bronwyn's also from KZN. Are you also? Yeah? Well, we've got 3 against 1. We've got the one volley here. But we're resilient in KZN. We know we've been through a hard time. If you remember when Inkatha were running the province, this was the place that didn't get much input from the national government. And unfortunately, the country needs to start being resilient in some way. It's probably the best interview I've had on this subject was with Arnold Goldstone. It was a couple of days ago. He runs Invicta. It's a big engineering firm. It's also chaired by and controlled by Christo Wiese. Now, Christo is a billionaire, so he actually doesn't care anymore. He's got so much money in other parts of the world. He speaks his mind, and clearly Arnold Goldstone, who sits next to him in the office, also speaks his mind. And the problem that came through in the strike, as far as what I could pick up from him, was that even though most of their factories were not unionized, NUMSA sent out mobs of 100 people, 150 people, who were heavily armed, beating up his employees, destroying property. And it's almost like we've got a situation in our country where we've forgotten. We have a fantastic constitution, we've forgotten how to employ it. We've got a rule of law, but we're kind of forgetting that it must work for both parties. So, there's a good story to tell, as someone who lives in Nkandla told us, in the real state of the nation. But it's not to do with labor legislation. We really are on the back foot. We inherited it from a country that there were lots of unintended consequences of what we've actually introduced there. And we're seeing maybe the worst of times right now in that front. My view on these things is that you have to hit a rock bottom in most things in life, before you actually surface again. And hopefully this was the rock bottom.
Jahendra, as a former trade unionist, how do you picture or how do you interpret the strike action that we've experienced?
Look, I think that for most people, locally as well as internationally, the strike action is disruptive. It is a sign of declining relations, but it's also part of normality because it was a wage strike. These things are periodic. Wage bargaining takes place every 2 or 3 years, depending on the industry. And in order to make that deal, people do push quite hard. You know, I've been involved in many strikes as a strike organizer as a young man. And so it's part of the normal cut and thrust of tough, robust collective bargaining. But I think the pattern that we've had over the last few years is one where the economy is taking a beating, perhaps for things outside of the economy. And if you look at the mining strike, it wasn't just about money, although money was definitely a key issue, and nobody stays out so long for just a point. But there's a political underlying factor.
Is the relationship between labor and business completely broken down?
No, you know, I was privileged enough to be part of the group that drew up the Labor Relations Act.
We're coming to that a little later. You don't think you're getting away with that?
I was trying to get away with that now. But, you know, management-worker relationships are not like harmonious under any circumstances anywhere. They go through times where they're peaceful. Between 1994 and 2004, I think there was a relative period of labor peace that we hadn't seen since 1922. Now we're in a rough and tumble period, which is not far away from where we were in the 80s. It's less than the 80s, but it's getting difficult. I think perhaps the biggest thing that's happened in the last 20 years is if you look at companies, human resources has become a secondary thing, whereas in the early 90s, every CEO was very close to human relations and human resources issues in particular. So it's become secondary. Unions themselves have changed quite a lot. They have much more overlapping interests with businesses and being invested in investment companies. The shop stewards are permanent shop stewards, full-time shop stewards who are paid on management grade. So the union movement has also changed, and this has led to what I think is a weakening of the construct of labor relations in the country. Not necessarily a breaking down of the relationship. So now the question is, can we look at it? Can we think what needs to be done to get a healthy relationship between these two contending forces working in a societally robust but healthy way?
I'm hoping that you've got some of those solutions. We're going to come back to that. David, we've sat night after night on that business news desk, month after month. You've been exasperated by the strike action, particularly in the mining sector.
Yeah, well, let me just tell you something. I married the daughter of a trade unionist. I married the daughter of a communist. So my battle with the trade unions goes back nearly 40 years.
Why do you think we placed you next to Jahendra?
In fact, yesterday I was doing an interview at the women's jail at Constitutional Hill, and my mother-in-law, bless her heart, has got her own cell.
You weren't interviewing your mother-in-law?
No, she died a few years ago, but Friday night dinner at our house was very heated. But I'm going to add on to a conversation that Alex started. But let me tell you from an investment point of view what worries me. And I think one of the benefits of being an investor today is that we can invest anywhere in the world. We can take people's money, thanks to the lifting of exchange controls. You know, for all intents and purposes, they are lifted. That we can take clients' money where we see best. So it's an open system for us. So we don't get Voyager points for investing in South Africa. So we have to ask, where's the best place to invest? And when I look at the JSE, there are a lot of troubling factors. If I take, and I'm going to take the top 50 shares, because that's the universe that I used. The top 50 shares make up 90% of the JSE. 77% of that earns its money outside of South Africa.
So it's not really reflective of the
It's not
underlying
reflective of
South
the
African
underlying.
economy.
But let's come back to the underlying. What remained after that? So I looked at JSE in Corp or SA in Corp. Most of it, financial services. A couple of retailers, a couple of healthcare companies, no manufacturing. Manufacturers do not exist on the JSE. You can't find them. Now, go back 20 years ago, they used to dominate the board. Whether it was, and even further, I've been on the market for 40 years, companies like Stewart & Lloyd's, Doorbell, you name it, Alec will remember, even the Eltron Group, a lot of these were manufacturing. They used to dominate together with the miners. In fact, the sad thing is that if you put all our gold miners together, this is another thing, all our gold miners, and remember, a lot of that gold mining is coming outside of South Africa. You put our platinum miners together, they equal Sasol in market cap. That's how small the miners have shrunk.
They equal Sasol in market cap.
So put our top 4 gold mines, our top 3 platinum mines, that's Anglo-Plats, Impalas, and Lonmin together. Put all of those together, you get Sasol.
Are you saying that this is a direct result of the strike action?
Well, I think not only that, but a weakening mining sector and a weakening manufacturing sector. A few months ago, not even a month ago, I did a presentation in Natal, in fact, in the convention center called The Great Trek. And what concerned me was that when I started to look at the JSE, more and more companies are seeking growth outside of South Africa. Now, what does that mean? I'll go into it because one of the companies that I looked very closely at was Invicta, where Arnold Goldstone has said, 50%?
50 in 3 years. You want
3 years,
50% out of
he wants
outside of South Africa.
Outside of South Africa.
Anyway. Anyway, but SA.
And what are we seeing? Have a look at the last couple of deals that have been done. Woolworths, where are they making headway? David Jones in Australia. That will be soon, that will be a third of Woolworths' share cap.
So David, let me bring Alec in again here. Are you saying, do you agree with David? Because I'm getting the impression that he feels we have killed the manufacturing sector in South Africa. Would that be too strong a terminology for you?
We have.
We have.
In my view, we've killed the big companies, and I think we're slowly killing the small companies as well.
Well, think of it. I mean, you have an engineering shop. You treat your people well. They're engaged employees. The fraction of this country, the engagement of employees is very low. We have about 15% of the workforce would be qualified as engaged, whereas in UK and US it's about 30%. So we're low. We're not great managers. But let's just say you have a well-managed firm. No union employees because you've gone back to the labor relations that you were talking about, Chandra, a little bit earlier, and you're engaging directly with your employees. You give them a reason to come to work every day. A union goes on strike, and your people can't come there. Your people get beaten up. You cannot continue to work. What are you going to do? You are going to take your machinery and capital, and you're going to put it somewhere else in the world. And that's the reality of,
so what is it going to
where
take
business is done.
What is it going to take for Invicta, Arnold Goldstone, to bring back the majority of his operation to South Africa? What would he like to see because of the conversation that you've just had?
Well, it's simple. Just a proper focus on this wonderful thing that we have called the National Development Plan. The National Development Plan is predicated on remanufacturing in South Africa, the growth of industrialization of South Africa. But the reality is the National Development Plan's a dead duck as long as we continue with labor relations, which are 148 out of 148 in the world. I think everyone knows.
Let me give that
realities
context.
there.
I think we need to give the 148 out of 148 context. And this is according to the World Economic Forum's competitiveness report. On labor relations, we rank stone last, 148 out of 148 countries surveyed. David, I want to move on to the rising interest rate environment, just cognizant of time and the themes that we need to cover. African Bank has imploded. The South African consumer is under pressure. We're coming off a period where interest rates have been at record lows. We don't know how quickly or how high they are going to rise in the foreseeable future.
You're asking the wrong person because I have absolutely no idea about inflation or economics at all. I just
Just look at the bigger picture. I'm not actually asking the wrong person, because we debate this all the time.
I tell you,
what's going to happen to the South African
from my
consumer?
perspective, that's why I'm saying I don't understand high economics. What I do understand, or what I'm trying to understand, is what's inflation. And
I didn't ask you about inflation.
No,
what I want
you're
to
talking
know,
about interest rates.
You understand money.
Yes.
You
you're
understand
talking about
the consumers.
You're talking
I'm
about where
saying
interest
that
rates go.
Interest rates are going up. People have borrowed money at those record lows.
That's why you can't raise interest rates.
So you're saying don't raise. We know they're going to raise. Alec, I'm going to come to you on this.
But hold on a sec. Jill Marcus is raising interest rates because that's her mandate, to try and keep inflation in the band, which she's not doing. And she can't do it. Why? Because inflation is not demand driven. It's not the excess demand or a lack of capacity that is creating inflation. It's something that we're importing, and it's something we're responsible for creating in terms of our low productivity.
But the reality is, David, that we have to face the fact that we're in a rising interest rate environment. I don't think we can get away from that.
Very, very slow rate. And the problem is that with growth, the numbers that you mentioned, if we start to raise interest rates, we're only going to kill that and going to make it even more difficult. We're putting more pressure on a consumer that's under pressure already. And this is this is a global phenomenon. We're going to grow at a much lower pace than we have in the past, because there's not enough momentum in markets, in other words, to get to the point where demand is actually forcing prices up because people are under pressure. So you're going to find globally that rates will remain low for longer. So it's going to be a very tough period for investors. Not in the stock market. We're going to make lots of money in the stock market, but traditional investors who relied on fixed interest investments, it's going to be a very tough period.
Alec, do you agree with me that we are in a rising interest rate environment? The South African Reserve Bank has pretty much stated that much.
Yeah, we are, but I'm surprised you didn't refer to that presentation we saw in Omaha with Van den Berg.
Yes.
Yeah, it was brilliant, absolutely brilliant. I've been battling with this
When you
for a
talk
long time.
Omaha, let's give a little context to our audience here. We're talking about the Berkshire Hathaway AGM that David and Alec regularly attend. And of course, that gives us some insight into the global investor, and particularly the US investor, what they think about Africa.
Yeah, we all go there for Warren Buffett. There's about 35,000 people who arrive there for this 83-year-old and his 90-year-old pal, answering questions for 5.5 hours, drinking cherry coke and chirping away at,
and eating
from time
Mars
to time.
bars and Seas candies.
But because there's so many people who go there, there's a chap called Bob Miles who organizes a value investor conference. And Dave and I were both there this year. And I've been battling with this whole story about inflations and interest rates. And this guy Van den Berg put it better than anybody else I'd seen. He went back into history and he showed how in the 1970s, when LBJ was, remember he succeeded Jack Kennedy, was shot when he was shot in Dallas, and he got the great social experiment and started spending money. And the money that was spent in America, one would have thought the inflation would come very quickly, and certainly the Federal Reserve Bank chairman was very worried about this. It took 8 years, but when it came, he said in about 18 months it went from 2% to 12.5%, and America had a horrible decade thereafter. We do know that after 2008, we had this thing called quantitative easing. There was a massive creation of money, as has never happened in history before. And that's why we have low interest rates around the world, because if you throw a lot of money at it, you're going to keep the price of it down. That's all interest rates are, the price of money. But the interesting part about this, that I took from it, he said there are 3 scenarios. The first scenario is the Japanese scenario. If Yellen pulls the money out of the system, it's got to get pulled out the system. That's a reality. You can't leave all of this money being created
excess money
indefinitely. So if she pulls it out too quickly, you get the Japan situation of 1989, where the Japanese did exactly the same thing, pulled it out, and the whole market imploded, and they had 20 years of, no economic growth. So clearly that doesn't isn't supposed to happen. The other scenario is if she does it too slowly, which is what Johnson did, or post-Johnson. They pulled it out a little bit too slowly. He reckons, Martin van der Berg, he reckons that that's the most likely because the politicians don't want to see the economy imploding. So if they pull it out too slowly, then inflation comes into the system, and after 8 to 10 years, he reckons, buy gold because we'll have an inflationary environment. The perfect scenario, and the one I would love to believe is going to happen, and with people like Bernanke and Buffett around to advise Obama and co., is they do the Goldilocks. They pull it out just at the right amount. And then we can get past this. We can get through this incredible rescue act that the world has had, would we forget about. We were on the brink of crazy things happening, not just in the United States, but here as well. So the interest rate environment, I agree with David, because of all the money that's sloshing around, because you can't pull it out too quickly, there will be a gradual increase in interest rates, it appears, and this is what Joel Marcus is telling us, but not at 25 points here, nothing next in 2 months' time,
so we're not going
another 25 points.
We're not going to impact that South African consumer as that's vulnerable at the moment. I didn't mean to come down too hard on you, David, in terms of the inflation side. But we've all been talking to the same economists. And what I wanted to get out of this is not debating whether it's the wrong or the right thing to do, but rather the fact that I think it's been very clearly set out that although it is going to be slow, we are going to see interest rates rise. We're going to move to concluding statements now, and Alec, I'm going to turn to you. I think perhaps also just throwing forward in a concluding statement on the state of the nation in South Africa. I think we've touched on the risks, the opportunities, and we've got to look at the global context. We've touched briefly on that. We've got politics at the moment taking the cake on the headline side of things. You say entrepreneurs don't look at those headlines. Something we need to be mindful of, geopolitics. We've also got terrible incidents in the airline industry globally. So that's what's been dominating the news flow. And perhaps just as you think of those concluding remarks, Alec, we'll kick off with you, but in the global picture.
Yeah, well, the thing I always come back to is South Africa's 0.3% of global GDP. 0.3%. We're a cork on the ocean. And what's happening in the rest of the world? You have the West is recovering and really doing very, very nicely, certainly in the United States. Europe is muddling through. Britain is a phenomenon. Nigeria, despite all its issues, because it is business-focused, business-driven, unleashing the potential of human beings, is doing terribly well. I don't think that South Africa can be isolated. I don't think that this country, its flirtation with outdated political dogma, which gets translated into economic issues, it has to end. But most of all, let's not forget that information is democratized today, that you can't do what you used to be able to do 5 years ago, 10 years ago, 20 years ago, that a cell phone gives you access to anything you want. So if you're a young person or an old person and you're motivated and you want to change your life, you can do it. Our parents couldn't. And I do believe that we have the shining eyes in this country, and we're going to be surprised at what entrepreneurs will manage to achieve within some pretty tight constraints that appear to be. I remain a bull, as David is on the JSE. I'm a big bull, not necessarily because I think SA Incorporated is being well managed, but for the reasons that we are going to rise on the international wave.
Jahendra?
I'm fairly positive about South Africa. I think we've got great opportunities here, great businesses. I agree with David. I think the region is very interesting to us. There are some long-term possibilities that Alec was talking about that could be good in the resources sector. But we do have to, in a pragmatic and incremental way, as a country, address the way companies and the public sector works together. It's not effective. There's a social issue which just cannot be avoided, which we've got to address quite radically.
David Shapiro.
South Africa is, if we look at South Africa, the southern tip of Africa, it's a blessed region. I've been privileged to be on the stock exchange for over 40 years. And I think what always astonishes me is just what we have here. We have an array of minerals that must be the envy of every country. We have beaches that, and I travel a lot simply because I've got children all over the world. I travel a lot. You can't. No, I haven't got children. I didn't manufacture them.
And on that note, we close the panel.
I opened myself up for that. My children, I've got New York, Sydney, Johannesburg.
I think you should just stop there. Don't elaborate.
I mean, our beaches, no one can match it. Our wildlife as a tourist destination, there's nowhere in the world that you can get the kind of wildlife that we have. The mountains, you know what I'm talking about. Golf courses, whatever. There's only one problem in South Africa, and that's the people. And that's nothing new. You know, if ever you've studied history, and I don't think we do history anymore, from the time that Van Riebeeck came, there's always been strife. You know, whether it was the Dutch versus the English, and I'm going back to Van Riebeeck's day, or whether it was the Xhosa and the Zulus, whoever it was, there's always been strife. And you know, once we overcome that, once we get harmony here, because as Alex said, we've got the most incredible people here. I was privileged yesterday to interview a chap by the name of Adrian Stern, who has an exhibition going in Johannesburg called 21 Icons. And if anybody can see it, they must see. In fact, as we talk now, he's launching the next 21 Icons. It's the narrative of people who've made a difference in South Africa. It's really an incredible exhibition. He's an Australian. He's an Australian, and he came here and he loves South Africa. Why? Because of the warmth, hospitality of our people. And so, you know, I stay here. I criticize. I'm outspoken, and it's for a reason. Is that I don't want to be a person who doesn't look at the problems face on, you know, who just buries their head and just hopes that it goes away. Because I think what you learn is that you have to challenge those problems. You have to look at them. You have to debate them face on. You know, and then when we do that, and we you know, and respect each other's side, then we got a chance.
Thank you so much. And to my esteemed panelists, Alec Hogg, Jahendra Naidu, and David Shapiro, thank you very much for the insights that you've shared with us this afternoon. You've been watching The Insiders, a business panel aimed at giving you insight, additional information, the inside knowledge, which can help to create a winning nation of confident investors.